So here we go with Impact Over Profits and I Am Academy with the man Nima, and we're gonna help him create a demo account on the MetaTrader 4 app to be trading in the foreign exchange markets, so that you can practice. And what you want to do is start with a balance of $3,000 at a 1 to 200 ratio, and we're gonna make that happen. So, my man, all we're gonna do is, do you have an iPhone or an Android first of all?
iPhone.
iPhone?
Yes.
Perfect. So that helps a lot right now since we both have iPhones, because both versions, iPhone and Android, have different kind of settings and a different layout for the MetaTrader 4. So that makes this kind of easy. What we're going to do is we're going to go to settings again on the bottom right-hand corner.
Yes.
We're going to go to settings again, the bottom right-hand corner in the MetaTrader 4.
Yep, I got it right here.
And then you're going to go to new account.
Yes.
And then open a demo account. Open demo account.
Okay.
And then you're going to search for the company. So it's going to enter company name or server name, right?
Mm-hmm.
And then from there, you can literally search Hugo's Way, Hugos Way, WAY.
Sorry, your voice just got cut. What was it?
Oh, Hugo's Way, HUGOSWAY. And then it should be like dash demo 3, right? Or dash demo something.
Yeah, dash demo 3.
Perfect. So you're going to click on that.
Uh-huh.
And then boom, you're going to put in your name, phone number, email, completely normal. They just need to know that you exist.
True.
So name, phone number, email, account types Hugo's Way.
Okay. Leverage.
You got those in already?
Yes.
Okay, cool. Fast typer. Leverage, you're going to put 1 to 200. Okay, you're going to click on that, 1 to 200.
Okay.
And then for deposit, you're going to change your deposit amount to $3,000. Okay. So
Okay.
it's it's good to have $100,000 kind of trading account. I'll just say this really quick, briefly for the recording. You want to start with $3,000 basically just because it makes sense. It's going to be more relatable to the average individual who's starting to trade. Who has, like, if you already have 100 grand, chances are you don't need to be learning how to trade. You invest your money and you're living well, right? So most
True.
people who are going to learn how to trade, they're going to have a smaller amount in their account probably to start with anyways. So that's why we just do $3,000. You could also have another demo account with $100,000 because you want to kind of like practice with higher amounts coming in. You want to practice with risking higher amounts, with profiting higher amounts, and kind of manifesting that 6-figure trading account into your life. And the more you learn about setting goals, law of attraction, the laws of the universe, all of that plays into this, and then being able to manifest that high paying and high reward trader account into your life, right? But for now, for starting out right, $3,000 USD trading account.
Register, right?
Register, yes, sir.
Great.
Then you should have your account. And we're not going to get into the settings of the charts or anything like that too much. That's how you start a demo account. For charts and the settings and stuff like that, what I might do is send you a screenshot for how mine looks, and that might work for you, it may not. But we'll go over that together on another session. For now, what I'm going to do is I'm going to share my screen. I'm going to help you learn how to utilize our scanner, the Harmonic Scanner with I Am Academy, right? So
Great.
I'm going to open up a new page. I'm going to log in. Looks like I'm logging in as a female. Just happens to be my mother's account. I have an account for my mother. So here we go. We're going to go to, and what's really cool about this is that you have different packages, FRX, HFX, or DCX, whether you want to trade regular Forex, binary options in HFX, or cryptocurrency in DCX. When you have the elite package, when you click on strategies, when you have the elite package, it looks like this. You have access to everything. Now, obviously, not everybody just has $374 to fork out, and that's okay. It's okay to specialize in one area, and that's what we're doing here right now, right? We've got the FRX package here with Nima, and I'm just going to click on harmonics. That's what we're going to go over right now, because this is the easiest way for you to copy and paste trade setups that are given to you from this scanner. And you don't even have to think about a whole lot when you're first starting out. You're just practicing actually taking the trade, because that in itself is a skill set. You know, it only takes like 10 seconds to do it, but, you know, typing in the numbers, all the digits, you know, whether it's 5 decimal places or 3 decimal places with the Japanese yen. It's a skill set to type in those numbers. So we're going to click on the scanner. And here we go. We've got this opened up, and it doesn't really matter too much. Okay, everybody's got different opinions, of course. But when you click on these things, they're all generally the same. They're brokers. They are not affiliated with the company at all. They're just different brokers that provide trade setups in the markets. And basically, they give you trade setups off of harmonic patterns that repeat themselves all the time in the markets. So, you know, for you, Nima, since we're talking here, and anybody else watching this, right quick, harmonic patterns are just these funny little triangles right here, and they reoccur, and they show up repeatedly all the time in the markets. Basically, the algorithms that the movements are based off of, and the people and the institutions, whatever, that move the markets, sometimes they create these kind of patterns, and we can trade off of these patterns because they repeat themselves. And that's why we're able to copy and paste this trade idea without even having to do a whole lot of analyzing. Obviously, it's better that you do your own analysis to kind of, but this is a great way for somebody that doesn't really know what they're doing to copy and paste trades and profit right away once you learn proper risk to reward management. But right quick, to give this outline, we've got the different brokers here. If you have Hugo's Way, it's probably a great idea to use Hugo's Way, right? I feel like that makes sense. Basically, because actually each broker can sometimes be a pip or 2 or 3 or 4 off of the actual price, and sometimes that happens. It just depends on the broker and whatever's going on in the world, I guess, at the time. But since we have a Hugo's Way demo account, probably stick to Hugo's Way for the most part. And you've got different time frames up here. 15-minute, don't do the 15-minute, do not bother with it, okay? Unless you're trading binary options, it might be a useful tool, but not really. 30-minute, usually stick to the 1 hour, the 4 hour, and the daily time frame, okay? The higher time frames. The 1 hour, because it's a good setup for intraday trading, which means holding a position for a few hours during the day, or, you know, maybe a couple of days, but mostly intraday trading. Whereas the 4 hour, the daily time frame, would be a little bit more of a swing trading. It's called swing trading, where you're holding positions for a few days to a couple weeks or so at a time. And then, just for general knowledge and information, position trading, it's called position trading, where you'd hold a position maybe for a month or so at a time. That's called taking a position, and just you're holding it for a longer time. Anyway, so since we're on the hourly time frame, for example, each of these candlesticks are worth 1 hour of time. Okay, we don't know how long, right? If we enter the market here, we don't know if this is going to go from here to this price in a number of hours, in a couple days, or how long this might take. One thing I do know about this one specifically is that it is AUD against the US dollar, and the Australian dollar happens to move actually kind of slow. It does move fairly slow compared to things like the Great British Pound, the GBP, anything. GBP anything is going to move incredibly fast. GBP USD sometimes. Ooh, XRP Shark. There's even some crypto. There's even some cryptocurrency actually with Hugo's Way as well. So XRP USD, it actually caught a buy on here. And, it caught, how many pips did it catch? Holy, it literally caught, well, 27 pips. Okay. 27 pips. Not a huge deal, but if you're using big money, that could be a big deal. Oh man, I'm currently in this sell right now, but not from this pattern. I'm not in this sell from this pattern specifically. I'm in this sell from this candlestick specifically on purpose. And I did it as a sell limit, meaning when the market eventually got up to this price, it kicks you into the trade automatically so that when the market starts falling, you are profiting right away. I had a sell limit literally for this price. It's really cool that it's working out right now because this candlestick right here, it's kind of hard to explain right now for the purpose of this call, but it's exactly where banks, institutions happen to manipulate the market. And I kind of knew that we'd be looking for a sell right there specifically because of this pattern. So that's exciting. It's cool that it's working out right now. And it's really cool when you know what you're talking about, right? Anyway, so the harmonic scanner, like I said, these are harmonic patterns that repeat themselves all the time in the market. This scanner provides you with the entry price of when to get into the market. It gives you the take profit points. That's what TP stands for, take profit. So that when you have these settings, these prices typed into your phone already on the MetaTrader 4, when the market eventually works its way up there, it's going to pull you out automatically into profit. It's going to pull you out automatically into profit. So, if we went for a buy here to take profit number 2, that would be I took that from the measuring tool over here, That would be about 115 pips. You take away the last number, it's 115 pips, which means that could pay you maybe $15, $150, or even $1,150, depending on the leverage size that you're using. Obviously, any amount in between that as well. But so basically, man, we can literally take this trade right now. It's coming in really, really clutch. So what you're going to do, my man, is you're going to open up MetaTrader 4, the MetaTrader 4 app.
It's open.
Okay. And then when you go to quotes on the far left-hand side, right?
Yeah.
You've got currency pairs there. Opening your demo account, you probably have the major pairs, everything with USD, correct?
True.
You're going to have anything with USD first on your list, because those are the major pairs. Everything else are either crosses or minor pairs, which you'll learn from the academy. And then do you have something that starts with like an E at the end of your list, like E something weird?
No.
No? Okay.
At the end, no.
Okay. What are the last couple on the list that you have?
EURCZK and EURDKK.
Perfect. So those two right there, we're going to delete those. So you're going to take the pencil on the top left-hand corner,
Uh-huh.
and you're going to click on the last two that you just said on the list. You're going to click on them both,
Okay.
and then click the delete button on the top right-hand corner.
Okay.
You don't need those. The plus sign on the top right-hand corner is how you can actually search a pair. Exotics, indices such as US 30 or the S&P 500 or the NASDAQ, okay? Energy, metals. Metals is there for such things like gold or silver, XAU USD being gold, XAG USD being silver, FX crosses, cryptos, cryptocurrency like BTC USD, which is Bitcoin, XRP USD being something like Ripple. Okay, you can trade Ripple against the US dollar, or even Ethereum, ETH USD. I bring those three up specifically because they are the most traded cryptos, you could say, most popular. They're the highest on the coin market cap. Also, for Swipecoin, those are the trades that get sent out. And then stocks and futures. So we mostly look at mainly Forex and crypto, sometimes metals in terms of gold. On the search bar, you can search anything. So what I'm going to get you to do, AUD USD should already be there on your list, but you're going to search right now for, let's say, what's another good pair? Let's go Well, put them in alphabetical order. So just type in AUD, CAD, CAD.
Okay.
Okay, and that's how you search for any pair. GBP, JPY, Euro, AUD, EUR, AUD. Okay, you can search for any pair and then click the plus sign, the green plus sign,
Yes.
and then press cancel or get out of there or whatever. Go back to your quotes on the bottom left-hand corner, and you should have AUD CAD now at the bottom of your list, right?
Right.
Perfect. That's how you add a pair.
Okay.
Now, let's type in this trade. It's coming. Wow, this is too perfect right now for the call. Now, realize in the markets, of course, anything could always happen. Anything could always happen. Nothing is completely random. Nothing is completely random. This is really, really important for your discipline in taking a trade. Nothing is random. Okay, everything is done either by algorithm or manipulation to screw people over by I'll say the market movers, the people who move the market. Okay, let's just say that for now. Um, and so therefore, nothing that we trade should be completely random. That's my point there.
Okay.
The number one reason why I failed a lot, and why most people fail a lot, is because they're taking random trades. They're like, oh, this looks good for a sell, and then just like go in without even thinking about it. This looks good, or I've got this feeling or some kind of intuition coming to me, and I'm like, yeah, I'm gonna sell right here. This is my stop loss, this is my take profit, and hope for the best. That sounds pretty freaking random to me, right? So nothing should be random, because in the markets, nothing is random. Make sense?
True. Yes.
Everything should be kind of planned or educationally. Yes. Okay. Anyway, what's really cool about this that I already see right now is that there is a small bit of a gap right here. Usually the market would eventually come back around to fill gaps like that. So I do feel fairly confident in this kind of a trade. Okay. Arvin just sent him a message. He got to leave. Peace out, bro. So anyway, we're gonna type or click on AUD/USD on your phone, and when you do that, you've got trade, chart, and details, right?
Yes.
Details have to do with like the spread and how much the broker's going to charge and different things like that. Not really, really important right now. You got trade and chart. So when you click on chart, that's where your chart for AUD/USD comes up. And I'm actually going to go in for this trade right now. I'm going to go in for a buy. But anyway, you've got the chart for AUD/USD on the top right-hand corner. You've got trade, right?
Yeah.
You're going to click on trade, and you should see market execution on the top, right?
Right.
Market execution. Perfect. Market execution. So, and then you've got something that says stop loss and take profit, right?
Yes.
So for this purpose, we're just going to do market execution. Okay, we're just going to do market execution because we are at right now the entry price, which means we want to enter the market right now, right? Because that's where it's saying to enter the market at. Makes sense?
Yeah.
So we're going to type in the stop loss. Okay, delete. When you click on the area for stop loss, just delete whatever comes up there. And you're going to type in this number right here. You're going to type in the stop loss number. So it says stop at, and then type in 0.699940. Or you can't do the 0, so just do 4, right? And that would be your stop loss. So if the market happens to fall from here and just like completely dumps, it's going to take you out automatically with that small loss.
Okay.
I say small because usually it's a little bit smaller than this, but this stop loss is actually about 50 pips, which is fair. It is fairly large. That's a fairly large stop loss. But for the sake of this call and right now, we're just going to run with it. We're going to go in at the entry price, and we're going to set the take profit. So delete whatever take profit comes up there. And we're going to set it for, let's do this. How much time do we have? 10 minutes? Perfect. We're going to set it for up here. Okay. We're going to set it for just a little bit before take profit number 3. Okay. And what I like to do personally is round it down to the nearest kind of, not whole number necessarily, but the nearest kind of, I don't know how to explain it. Like, I don't want 72,364. That's like, in my head, that doesn't make sense. Okay. Humans, in terms of psychology, likes big, fat, round, whole numbers. The markets like it too. Okay. And I think that's why we got down right down to 7,500. We could see this come down a little bit closer to 70,000 and then head back up. But this is what we're looking at right now. So what I'm going to type in for my take profit is 72 or 0.72 350.
50, right?
Yep.
Great.
0.72 350. And then you're going to press, oh wait, sorry. Hang on, before you press anything. See the 0.01 at the top?
0.01, yes.
Is that what it says? So
yeah.
To the right of that, you got a blue number of plus 0.01, right? So when you click on that, it's now going to up your leverage size to 0.02, correct?
Okay.
Is that what it says, 0.02?
No, plus 0.01.
Yeah. Okay, cool. So click that. Click the plus 0.01.
Okay. Oh, okay. I got it now. Okay,
Now
I
it says
understand.
0.02.
Yes.
Okay, cool. So 0.01, I'll type it up on here actually after, but so now it says 0.02, right?
Yeah.
Perfect. Now we're going to click on buy by market.
What is sound?
Oh, did it reject you?
Was that sound for rejecting?
Yeah.
Please. Invalid S/L and what? Or T/P.
So you just typed in something wrong. That's all. You just typed in something wrong. Or you might have pressed
Oh,
sell. Did you press sell or buy?
buy.
Okay. Just check your stop loss again. Does it say 0.699999?
It's 0.69994.
Yeah, you gotta have 0 decimal.
So 999.
So the whole number is 0.0 decimal.
Okay.
You see that?
0.69994.
0 decimal.
Oh, okay.
Yeah, so go to your stop loss for AUD USD, right? You gotta type in 0 decimal, like period, like 0.6999999. And then your take profit, make sure it's 0 decimal 72350.
Yeah.
Okay, something's wrong there. So I'm going to stop sharing my screen just so I can see your phone a little bit bigger. Okay, yeah, it looks pretty normal. Oh, you're on AUD CAD.
So, oh,
We added AUD CAD. I didn't mean to laugh. But it's kind of funny, right? We added AUD CAD as an example, right, for adding a pair.
we have I have to do this trading at AUD US, right?
AUD USD. Yeah.
Okay, okay.
There we go.
0.6999, 0.6999, and the profit was 0.72350, right?
Exactly.
Okay.
Okay.
Okay, leverage 0.02 and buy market.
Yep. Got it.
Please wait. Yes.
Perfect. Now you're in it.
Yes.
Awesome. So now that we have 4 minutes left on, hang on, I'm just gonna hold up. If no one has guests for our call tonight, then we'll just keep going until I hear from someone.
Okay.
Like I don't have to. Oh, you have an exam at 9:45?
Oh yeah.
Okay.
So
Okay, hang on. Here we go. Ready? So there we go. So now, this is where a lot of people fail. Sometimes, this market still has opportunity to fall down a little bit more before it kind of turns around and goes back up. But a lot of people get scared in here and choose to take out their trade automatically, like by themselves, without giving it a chance. You got to let the market breathe and let the markets do its thing. It's going to move in waves. It's going to go up and down, and you got to let it do its thing. You're going to be up in profit. You're going to be out of profit. You're going to be, you know what I mean? It's going to move. Okay. The patience is really, really key as a trader. So the reason why we did 0.02, okay, is because, I mean, it's only 10 cents per pip, but that's okay. That's okay. You make 200 pips, that's 20 bucks. And then as you increase your leverage size, you make a lot more, and you're going to learn about that through the academy, etc. But the reason why we did 0.02 is because this is just one strategy. This is one strategy. It's called, well, not twin trading necessarily, because twin trading would be taking two positions and closing one of them out when you're like halfway in profit or something, halfway up, and you wanted to take out some of your profit, and so you close out one of your trades. That would be called twin trading.
okay.
What we just did right now was take a 0.02 so that we're doubling up the position, and what can happen is, let's say we get to take profit number 1 or take profit number 2, we can close out half of our position. So when let's say the market turns around and moves up to take profit number 1 or number 2, whatever we want, we can close out 0.01. Okay, so that we can take out then half of the profit that we made. So let's say the market goes from here to here and we made $30. Okay, I'm just giving an example. We made $30. Okay, if we take out half the trade at 0.01, that means it's going to, that means we're going to profit, $15. And then boom, we can let the rest of the trade, the rest of the 0.01 trade run. We just keep in half the trade, and we're going to let it keep running towards take profit number 3, so that when it gets to take profit number 3, it pulls us out automatically with the rest of the profit, with the rest of the money. Does that kind of make sense?
Yeah, completely.
And we can adjust that automatically onto our phone. So if I'm clicking my winning position here and click on close, oh, sorry, when you go to trade on the bottom of the app, you click on trade and you hold down a position and you click on close. From there, you can adjust your position. You could click on the negative 0.01 to drop it down to 0.01. You can adjust that manually so that you can close out half your position, whether it's half your loss so that you're not risking so much, or you're closing out half your profits when the time comes. So if anybody that's watching this right now has questions about that, definitely get back to your mentor, whoever obviously brought you into the academy and enrolled you, because they'll have better information on it, etc. For us right now, man, I'll just run through for another 5 minutes. Nima, you have 5 minutes?
Yeah, yeah, sure.
Perfect. I'll keep talking for 5 minutes until I hear from someone that might have a guest for a call. Anyway, so this is the scanner right now. Now what happens? This is a tool right here. Long position and short position. So the short position means to sell. It means going against. Okay, it's called shorting. So if I click on sell, it would look like this, where our take profit would be below, your stop loss would be above. For this scenario, we are buying, right? We're placing a buy. So what does that look like? We press a buy on the entry point and potential take profit towards take profit number 3.
Mm-hmm.
And we were aiming for maybe 32,350, right? 32 or 72,350 about. And then the stop loss we had about right here. And so we're risking 48. You read this as 48, you take out the last number. Same thing
Yeah.
with up here. Same thing with up here. You take out the last number, and we are now shooting for about 186 pips profit. So we are risking 48 pips to make 186 pips. And for risk to reward, that is a 1 in 3.87 risk to reward. Okay. So that's like risking $10 to make 38, or risking $100 to make $380. You could picture it like that, right?
Okay, yeah.
Now, what does this mean in terms of, lot sizes and potential money gains? Well, check this out. Where's my text here? Boom. We said how much? We said risking 48 pips and reward 186 pips. Boom. So let's just say 186 pips for our reward means 0.01. It's 10 cents per pip. So that's going to give us a payout of $18.60, right? Depending on the pair. Some of the exchange rates between the currency pairs are obviously different. So it's going to be a little bit more, a little bit less, depending on the pair. Okay. Take this with a grain of salt right now. It could be $16, it could be $20, depending on the pair, right? Because all the exchange rates, obviously, between the currencies are different.
Right.
Now, this is the same thing. So, 0.02, that same 86 pips is actually just doubled, right? It's just doubled. So 18 and 18, that's like $36 plus the 60 cents. It's about $37 now and 20 cents. If we hold it all the way up to almost to take profit number 3, the whole 0.02, right? Our reward would be $37. Now that's just the basics of showing how the lot sizes works. 0.1, I mean, you could do 0.03, 0.04, whatever. 0.1, that's $1 per pip, $1 per pip. So now our potential reward with a 0.01 lot size, for example, would be $186. And that's how we make money in the markets. So a good rule of thumb is right, is 0.01 lot size per $100 in account. Okay, I want to type that in for the video so that we know. So if you have $1,000 in your account, let's say, you can safely use, and you'll learn about this in terms of risk reward, because you only want to risk 2 to 3% of your entire account per trade. 0.01 dollar per pip, that's $186. If you have $1,000 in your account, this would be good to use. You're potentially going to make then $186, right? That's pretty good. 1.00, that's called a standard lot size, and that's if you have a little bit more money in your account, like a lot more money in your account, and you really, really know what you're doing, obviously, because it is $10 per pip. Okay, you do not want to make a mistake on that. $10 per pip. You do not want to make a mistake on that. So then that's going to obviously equal out to $1,860. Now, like I said, this is based off of specifically a specific currency pair. All currency pairs are going to be a little bit more or a little bit less depending on the pair that you're trading due to its exchange rate. So I hope that makes sense. The only thing that we didn't go over on here, do you want to take a picture of this, or I'm going to
Yeah,
take a
just
screenshot
give
of
me a
it.
sec. So I have a question.
Yeah,
How we can put the limit like now? Oh, where is it? Oh, here.
I took a screenshot of it actually, so it's all good.
Okay. So now I trade with all money that I have, right? Because I didn't choose any specific amount.
Okay, yeah, great question. So you have $3,000 in your account, right?
Yeah.
Yeah, so you're not trading with all your money. That's the point of the stop loss. See? So because you used a 0.02 and you're risking almost 50 pips, right?
Okay.
You're risking almost 50 pips. So because you set a stop loss for 50 pips using a 0.02 lot size, you're risking $10 then.
Okay.
That's it. You're risking $10 right now to make wait, did I get that right? Yeah. Risking $10 to potentially make 180.
Okay.
Wait, no, sorry. I got that wrong.
38.
But we'll get into it a lot more on future calls together, etc. Okay.
Okay, sure.
I got that figure wrong, but 0.02, right? You're risking basically $10 of your entire account right now. That's all.
Okay, great. Okay.
That is the importance of your stop loss because, right, if you don't have a stop loss and the trade goes against you, there goes your whole account and you don't want that.
No.
You know what I mean?
Not yet.
So the only thing we didn't quite cover on this call is a sell setup. Boom, this is perfect. Here you would do the exact same thing, except instead of pressing buy, you're selling because the stop loss is above your entry. You're entering the market here for GBP. This is the currency pair up here, GBP AUD, the pound against the Australian dollar. You're entering the market at 1.83999975. And your stop loss is above your entry price, and you want to see the market fall so that you have the setting already in place for take profit, either number 1, number 2, or number 3, so that eventually when the market falls, this amount, you get pulled out automatically with that profit. 300. See, this is the pound pair, right? I told you it moves a lot.
Oh yeah.
This is 315 pips. See, it's a totally different story now. That's what's really cool about that. So anyway, man, like I said, this would be the same thing, except you're going to press sell instead of buy. You're shorting the market here.
Mm-hmm.
And this is actually really cool to take note because your stop loss here is way, way less than the previous example. See?
Oh yeah.
Well, not way less, sorry. It just looks way less because it's so spread out. It's so much more spread out.
The time is different. Oh yeah. Okay.
It's still a fair amount of pips, but anyways, it's all good. We'll get into it a lot more on future calls. Definitely always go through the academy, number 1. Definitely always, search the educator's favorite videos. Mike Miles, Evan Gabriel on the site, etc. Those would be some people to listen to. And that's the end of the call so far. We went over the Harmonic Scanner with the IM Academy. We went over how to set up a demo account and also taking a trade. Excellent.
Great. Thank you so much.
I almost just ended the meeting. I just meant to stop the recording.